Hosted by Matt Riches. Watch the market unfold. $1 trillion tickers. Turning data to gold. $1 trillion tickers. Watch the market unfold. $1 trillion tickers. Good morning, good afternoon, or good evening. Wherever you're tuning in from around the globe. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Welcome to the $1 Trillion Tickets broadcast. I'm your host, Matt Riches. We're coming into Friday with no major red or orange folders for data today, but the market is still giving us plenty to talk about. Yesterday, SPX hit a new all-time high, and so did the Nasdaq 100. But after that, it pulled back overnight. SPX is currently down about 1.25% from yesterday's close, and the Nasdaq 100 is closer to 1.75% down from yesterday's close. So the simple question is, was yesterday's high a pause before continuation or the start of a real pullback? I track the headlines, the data, and the market levels so you don't have to. This show is for education and entertainment only. Always do your own research, but you can use this show as a foundation. Before we get into the charts, let's get into the mindset. That is our mantra. I deserve to be healthy. I deserve to be happy. I deserve the wealth that I'm building for me and my family. Riches and freedom, they come to our hands. I am the master of all I command. My learning is limitless. My earnings are too. The more I discover, the more I can do. The stock market is a machine of design, and I have the power to make that wealth mine. I am capable, I am skilled, I am bold. Blessings on the journey as the vision unfolds. Hosted by Matt Riches.
All right, now let's get into the macro news. There we go. Here's what makes this morning more interesting. This is the first morning where the market is not just calmly continuing to go higher. All week, we kept on seeing strength, new highs, buyers stepping in, technology leading, AI names pushing the market forward. But yesterday, the market finally showed a little hesitation after hitting those fresh highs. SPX topped out yesterday at 9 a.m. at 7,514. It's still closed strong at 7,501, but since then it has sold off through the afternoon and the overnight. The Nasdaq 100 also hit an all-time high around 9 a.m., hitting 29,673. It did close at 29,599 and is down almost 1.8% from yesterday's close. This is not a crash, but it is a change in tone. And after the kind of week that we had, that change matters. The fear and greed index is at 65, so we're not in extreme fear yet. So we still got some ways to go for that. But it is telling us that everyone is wildly euphoric. That leaves us in an interesting place. The trend is still strong. The highs are fresh, but the overnight reaction is giving traders a reason to ask whether the market needs to cool off. Now let's talk about Nvidia. Nvidia closed at $5.7 trillion market cap, while Google closed at $4.81 trillion. That keeps Nvidia firmly in the lead as the world's most valuable company. But Nvidia is also part of the pressure this morning. Reports say that the U.S. has cleared some H200 chips sales to China firms, but no deliveries have been made yet. China is still holding back, and Chinese officials are pushing domestic technology companies toward homegrown AI chip alternatives. That matters because Nvidia has been one of the main engines of the market as of late. If Nvidia starts pulling back, the market can feel it. When the leaders slow down, the whole AI trade gets tested. Now, let's add the macro backdrop. The 10-year Treasury yield gapped up, and now it is around 4.56. This is the highest level since mid-2025. Higher yields can pressure growth stocks, especially the high valuation tech names that have been leading the rally.
Oil is also elevated. Brent crude is above 109 per barrel because of the ongoing war at the Strait of Hormuz. Higher oil prices mean more inflation pressure. More inflation pressure means more rate concerns. And when yields rise and oil rises, traders must start paying attention. Gold and silver are selling off as the US dollar strengthens. Bitcoin is around 79,000, and today marks an important Fed leadership transition with Kevin Warsh taking over the Fed chair seat confirmed by Senate. That adds another layer to the market. The market is not just watching prices, it's watching leadership, it's watching policy expectations, and it is watching whether the new Fed tone changes how investors think about inflation, rates, and risk assets. No notable earnings today. All right, so let's get into Robert Greene's daily law. The Machiavellian gift, daily law. Although we often view other people's actions in the most cynical light, we rarely see the Machiavellian element of a gift, which quite often hides ulterior motives. Today's law is about understanding that generosity can sometimes be used as a distraction. A gift can lower defenses, a kind gesture can create trust, and once trust is created, people may stop watching closely. Robert Greene is reminding us that a gift is not always the full story. Sometimes the giving comes before the taking. The lesson is not to reject every gift. The lesson is to ask, what comes next? In long-term investing, this applies to company promises, buybacks, dividends, incentives, and big announcements. The company can offer something that looks shareholder-friendly. The CEO can make a generous-looking move. A business can present a deal as a gift to investors, but investors still have to ask, what is the trade-off? What is being hidden? What is the company trying to distract us from? Is this creating long-term value or just changing the story for a moment? Do not be distracted by the gift. Study the incentives. As far as day trading, this law connects directly to price action. The market can give you a beautiful bounce, a clean breakout, a strong first candle, a gift-looking setup, but sometimes that move is only there to pull traders in before reversing. This is why confirmation matters. If price gives you a gift, do not get hypnotized by it. Ask whether the move is holding. Ask whether volume supports it. Ask whether the level is being defended. The market does not owe us anything. The edge comes from staying alert after the gift. Stay patient, stay disciplined. Execution over emotion. Process over prediction. Now let's get on these charts, y'all. See, this is the 10-year Treasury yield note right here. You see this huge gap from yesterday to today? Yeah, you see, now it hit 4.5. So get ready for that, y'all. Oh, let me check out these earnings right quick. So we have Figma yesterday after market close. Beat on earnings by 57.9%, beat on revenue by 5.5%, and it is currently up 9.4% from yesterday's close. And then we also had AMAT after the close yesterday, beat on earnings by 6.7%, beat on revenue by 2.9%. It's currently down 1.5% from yesterday's close. All right, now let's get on these trading dollar tickers. You can see the gap down clearly. This is a 15-minute chart. Let me go on a 30-minute chart. All right, you can see the gap down clearly. SPY's at 739, 739.23. To the downside support, we got 738.39, 738.89, which is the pre-market low, followed by our levels here: 738.80, 736.80, 736.15. To the upside resistance, we got 739.82, 742, 743.60, and a pre-market high of 744.36. QQQ gap down as well. Currently in the pre-market at 707.26. To the downside support, we got 706.80, 705.80, 704.60. To the upside resistance, we got 708.45, 709.85, 712.35, and a pre-market high of 713.99. The VIX has gapped up as well. The VIX it maxed out at 1927, but it's currently at 1914. So the VIX is highly elevated. Next, we got Nvidia currently in the pre-market at 229.09. The downside support, we got 228.04, which is also the top of a very small gap. And then we got 227.85, 226.50, 225.10. To the upside resistance, we got 230.65, 231.75, 233.85, and a pre-market high at 236.98. Next, we got Google currently in the pre-market at the pre-market low of 393.15. To the downside support, we got 392.70, 391.15, 388.40. To the upside resistance, we got 395.85, 396.40, and a pre-market high of 397.39. All right, that's all we're going to do for today because I'm running late. We'll see you at the market open.